Well, our viewers have increasingly heard about so-called alternative risk transfer involving the use of techniques other than traditional insurance. In that context, many businesses, even smaller companies, are being urged to consider forming a captive insurance company, aren't they, Richard?
Becky, we are getting asked more and more by clients, mid-sized clients, wealthy families, and the like, as to whether or not they should consider the so-called captive insurance as a means of managing the expenses of their businesses and to varying degrees to reduce their tax liability.
Since our topic is taxation, let me ask you how the tax code in general and Code Section 831B in particular relates to captive insurance companies.
Captive insurance companies have been around for many, many years. They've been used historically by larger corporations as a means of attempting to diversify their insurance exposure and to manage that exposure in a prudent fashion. There are special incentives for the creation of so-called small captive insurance companies. Under the Internal Revenue Code, an organization can set up a captive insurance company and shelter up to $1.2 million of insurance premiums, captive insurance premiums, from being taxed, and have the captive be taxed only on its investment income. This creates a significant incentive tax-wise to the process of trying to manage efficiently one's insurance exposure.
Well, certainly proponents of captive insurance companies never fail to point out the estate planning benefits that could also accrue from using this technique, do they?
Becky, that's correct. They do mention the estate tax benefits alongside the insurance benefits. Therein sometimes is part of the question that can be raised by the taxman in terms of the appropriateness of captive insurance for small businesses, closely held family situations.
In that context, the skeptics never fail to point out the IRS's belief that captive insurance could often be more of a tax shelter than a business-driven arrangement, right?
Becky, first of all, captive insurance in of itself is perfectly legal. Even the Internal Revenue Service says that. On the other hand, there are abuses. There are perceived abuses. There may be actual abuses that occur. And it's in the area where the non-insurance benefits appear to outweigh the insurance benefits where taxpayers run the risk of getting into trouble.